This is Home Buying Basics, where we attempt to simplify the mortgage process for buying a home. I'm Azubuike with Edge Home Finance, and today we're going to go over closing costs. Yes, we're going to figure out the what, the how, the why behind closing costs. We're going to make sense of all of it. So stay tuned. Hopefully by the end of this video, you'll feel a lot more confident about what closing costs entails. So let's get into it. All right, everybody. So we're going to talk about what in the world are closing costs? Where do they come from? How and what and why? We're going to address all of that. And I figured the best way to do it would be to actually go over a loan estimate and a closing disclosure. So you can see how this is actually broken out. This is something that I believe in 2015, 2016, all lenders are required to issue loan estimates and closing disclosures, at least all lenders that are answering to Fannie Mae and government institution regulatory guidelines. So basically, this is what a loan estimate entails, and then I'm going to make sense of all the closing costs. Okay, this is an example. $570,000 loan amount, or $570,600 loan amount. You see the purchase price right here. If this is a refinance, it won't have a purchase price. It will just have the estimated value on the loan estimate, the finalized value on the closing disclosure. But for purposes of this demonstration, we're just looking at a purchase transaction. Gives you the details of the loan term, the type of loan it is, purpose is purchase, product is showing a fixed rate, conventional, loan number for the lender, and then whether the rate is locked or not. So this basically is the front page of the loan estimate. You see the interest rate here. This was last year. You can't get rates like that right now. But yeah, this guy got a pretty good rate and decided to buy down. And I'll explain that here in a little bit. It shows the principal and interest right here. And then if there's any prepayment penalties, you'll see the answer to that right here. It makes it very clear, no and no to balloon payment and prepayment penalties. And ultimately, you're seeing what the principal and interest will be in years 1 through 6 and 7 through 30. It's the same, just to give you an example of the fact that it is fixed. If it wasn't going to be fixed, it would tell you how long it's fixed and what it could potentially change to here. This is in the situation where you have an ARM adjusted rate mortgage, but in this case, it's fixed. So this is kind of projecting your overall payment. This is again on the loan estimate side. I'll show you how it finalizes on the closing disclosure. But the loan estimate is going to give you an idea of what mortgage insurance is going to be, what estimated escrow is going to be. And estimated escrow is a breakdown of what all is included here is what is included in this number here. So estimated escrow of 646 includes property taxes, homeowners insurance. And right here, it says if it's in escrow or not. So there's homeowners insurance dues on this loan, but it's not a part of escrow. So that's why it says no right here. So that's what's going on right there. It gives you a total of your estimated taxes, insurance, and assessments. That means homeowners association is also included in this number. And it gives you the total. So, and if it's basically higher than this plus this, then you know it's adding your assessments on there. And you can see the estimate includes that because it's checked right here, but it says it's not an escrow. So that's why this number is different right here. So hopefully that makes sense. A lot of people get tripped up on that. Like, hey, how come this number is different from this number when you add it together? Well, it's because of what the estimate's including versus what's included in escrow. So let's keep going down. It's closing costs. This is giving you an idea of your estimated closing costs for this deal and what your total cash to close will be. So cash to close includes down payment plus the closing costs, okay? So when we scroll down here to the next page, you see now the breakdown of closing costs. Section A, B, C, D totals up section A through C. And then the next column starts off with section E and going all the way down to section H, and then I is the total of E, F, G, and H. And then you have J being the total of all of it. So I'm going to break down what each section is so that you can understand what closing costs entail. So ultimately, section A is what the lender is charging you. These are the lender fees. These are ultimately what the lender is responsible for, okay? So on this loan, the borrower decided to buy down the rate, okay? And it costs this amount. This amount, 0.245%, is the actual amount of the loan that it's costing the borrower to get that rate. So that's what that is referring to. When it says points, it's basically another way of saying percentage points. 0.245% points of the loan amount ends up being this number here. And then in addition to the underwriting fee, that's their total lender fees, or AKA origination charges. All right, so section B is somewhat affiliated to the lender, but it's not going directly to the lender. So the lender has some say in this as far as what the charges are, but it's not fees that they pocket. This is services you can't shop for because it's affiliated with the transaction, with the lender. So for example, appraisal fee, that's something that you have to pay for in order to get an appraisal. But that fee doesn't go to the lender. So it's not the lender's direct responsibility. They're just required to disclose it to you. Same thing with the contract processing fee. There's a contracted processor that's going to be doing this loan, and their fee is $7.95. That doesn't go to the lender. That goes to the processing company that is doing the processing for the loan. So that's what that's there for. Same thing with the credit report fee. Typically, lenders use third-party companies to get their credit reports, and that's a fee that they have to send back to the company that gave them the credit report. So that's ultimately what that's there for. So you can see it's kind of associated with the lender, but it's not the lender's fee directly. All right. Section C is not associated with the lender as from a standpoint of they choose who is providing this service. This is something that you can shop for, and that's why it says that here, services you can shop for. So title companies are typically decided by real estate agents representing their clients. But at the end of the day, it is a choice that you can make as a consumer, as the buyer, as the borrower. You can decide on the title company that you want to work with. You can go around and shop it if you wanted to, but most title companies, in my experience, are pretty comparable in price because there's a certain calculation that determines their lender insurance charges. And again, a lot of them are pretty much around the same, but that is something that you can shop if you so choose. And so once the title company has been determined, typically that's a little bit into the transaction. Initially, when the lender is putting out the loan estimate, they're just giving you an idea of what this can be. And then it gets finalized later on once the title company is able to come in and say, okay, here's exactly what our fees are, okay? Then section D totals all that up. And then you've got the total amount for that side. And then we go on to the right column, and we see here section E. This is basically in the county that you're in. This is the charges that goes to the county. They typically have charges for recording the transaction, making sure that your information is actually listed with the county for the purposes of tax assessments and other things, clerical things that they have to be responsible for. So those are the charges that they're putting on, and this is disclosed to you here. Transfer taxes, a lot of times there's a small calculation percentage amount that they take of the purchase price to charge the new buyer, transferring the tax information from the seller to the new buyer. So that's what that's there for. Prepaids is ultimately going to take 12 months of your insurance, okay? Insurance is always paid up front. So that's collected at closing. So whatever your homeowner's insurance quote ends up being, the total premium for the year is going to be collected at closing. So you pay for the whole year in advance. And then the prepaid interest is basically the amount of days that you're paying for interest before your first payment is due. So basically, if you were to close on the 15th of the month, you skip a month after you close before you make your first payment. So they're going to collect 15 days of interest before your first payment of the total 30 days is collected with your first payment being due, if that makes sense. So that's ultimately what prepaid interest is. It depends on the day that you're closing, and it will be calculated based on your interest rate and the number of days before you're closing. Or the number of days after you're closing, I should say, before the first month of interest starts being collected. And then Section G is breaking down your homeowner's insurance and your taxes. So ultimately, this is collected in order to have your escrow account be able to pay your payments at the end of the year. So the way this works is if you're escrowing your insurance and taxes, which if you're not putting 20% down, typically it's a mandatory requirement from the lender. And if you're putting 20% down, they'll allow you to not escrow if you so choose. You can pay for it on your own. I personally prefer escrowing either way, just because it allows for 3 birds to be knocked out with 1 stone. And anytime you're making your payment, insurance is being collected, taxes are being collected. So ultimately, homeowners insurance is going to be treated at the end of the year. The homeowners insurance is going to want to collect their next year of payments, right? So when you're putting escrow here, you're putting a cushion that allows the escrow department to have a little left over in case there's a change in your policy, in case your payment goes up in your policy, whatever the case is. You want to be able to show that you have a cushion for that. And then property taxes are the same thing. You're going to want to have a cushion in your escrow, and in case there's an assessment change, change in the annual amount of your property taxes that are due. So anytime you're making your mortgage payment, the monthly contributions to your insurance and your taxes goes to your escrow account. And then at the end of the year, whenever the annual amounts are due for insurance and taxes, your escrow department pays that bill for you. And then there's basically, you start over collecting again for the next year. So anytime you refinance or sell, you typically get a refund of whatever is left over in your escrow account. And lenders aren't allowed to hold in there more than 2 months for each. And so you see here more than that here, you see 3 and 6, and I'll explain that here once we do look at the closing disclosure. But the reason that is the lender is typically giving you an estimate for what the total amount of taxes will be required to be in your escrow account based on the date that your county has a due date for your property taxes. So that's why that number is there higher, but you end up getting it balanced out to typically 2 and 2 based on what the seller is going to contribute to you is a proration amount based on the amount of time they've been in the home before you're actually taking ownership of it. And then the 3 here adds an extra to the 2 because you're skipping 1 month of payment. So that would kind of make sense here a little bit when I look at the closing disclosure. Section H is optional information here for title owners policy versus typically when you're doing a home purchase and you have a lender involved. It's not necessarily to do a title owner's policy because you're already having the title insurance with the lender's name on it. But once you own the home free and clear, you definitely want to make sure you have a title owner's policy. Other things that can go here are things like HOAs, different initiation fees for certain communities. HOA community may require you to send reserve amount. That kind of stuff is what will go here. If you're a first-time home buyer doing a down payment assistance program, you might see home buyer course fee here, little things like that. So that's ultimately what makes up your closing costs. And then when you see on the loan estimate, calculating cash to close, is basically putting all of this together and it's telling you what your estimated money for total closing costs and down payment is going to be. So the down payment portions here, this particular borrower already put $20,000 towards that, so they get credit for that. That, in addition to the closing costs, gives us this number here, which is what we saw on the first page right here. So I want to just quickly jump over to the closing disclosure version of this so you can kind of see how it changes. It stays in the same format, but ultimately the final numbers are going to show what everyone has basically come in and verified. So the lender, once again, they're required to give you an idea of what this is going to look like at loan estimate, and then the closing disclosure is going to be finalized once the title company has gone through and verify that everything is correct. So here you see the specific number of the origination fee. You see the fact that the borrower has already paid the appraisal, paid it before closing, right? Not at closing. So this is not going to be charged to him again, but it's still considered a closing cost, right? So that's why it's on this column, not on this column. And you scroll down, you see here, closing disclosure, or I'm sorry, the section C is pretty much similar. But the main thing I want to show you on this, the closing disclosure, is the taxes being collected. If you keep scrolling, the closing disclosure has this document or this page included in this document under calculating cash to close. You now see summaries of transactions. If you scroll down here, you see this person actually got a seller credit of $1,400. That wasn't included in the loan estimate because the lender wasn't aware of that. And then this wasn't included because basically they allow the taxes to be figured out by the county and the title company to kind of figure out what the proration here is. But here you see the unpaid or adjustments for items unpaid by the seller. So basically the buyer is getting a credit for the amount of time that the seller has owned the property for the year, right? They're getting a proration of that taxes as a credit back to their section, section G, okay? So all of this ends up being credited by that number you saw there with the taxes. And this aggregate adjustment, some people get a little tripped up with that term. All aggregate adjustment is the lender putting a calculation together to make sure they're not over collecting for escrows. Again, they're not allowed to hold more than 2 months for each insurance and taxes. So this is basically a way of making sure that they're not over collecting, because in some cases, taxes might require a certain number because of the due date in the year, but it ends up being more than what they have to collect because of how the dates work out. So that's basically what the aggregate adjustment is. So, and this is what your closing disclosure ends up looking like. So again, it's similar to the loan estimate, but hopefully that makes sense of all that goes into closing costs and the different sections that you see in a loan estimate and closing disclosure. As always, I'm here to help. Feel free to call me if you have any questions. Obviously, we'd love to work with you. If you're looking to buy or refinance, I can definitely make sense of loan estimates for you whenever we're working together. Obviously, I always do a thorough job of making sure my clients understands the inside and outs of all the numbers. And then, by the way, let us know if you're wanting to get a competitive offer in comparison to what you're seeing here. We're very, very competitive with our costs just because we're brokers. We're able to ultimately shop for our clients and get them the best deals. So a lot of times we can even have scenarios where we're not charging any lender fees at all. So definitely feel free to reach out and ask about that. And hopefully that was helpful. Feel free to reach out with any questions, and hopefully we'll see you guys on the next video. Thanks for tuning in. Thanks for watching. If you found any of the content helpful, please subscribe, hit the notifications icon so that you can be informed of the next video upload. And if you're a borrower looking for a home loan, purchase, or refinance, I'd love the opportunity to work with you. Please give me a call or start the process at applywithzo.com.